November brought our portfolio to yet another all-time high, but it also contained the biggest moves of the year by far and away. I have 6 figures of news to share this month as we transition our portfolio towards early retirement. And we're still at least 7 years away from that glorious day. But the focus of the portfolio is shifting. In this video, we'll get into the portfolio's value by holding, all new transactions for November, the juicy dividends received, although it's a little less juicy, a HODL Factory update, my individual stocks, and they had a brutal month against the market. And this isn't just clickbait here, huge future moves. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please electrify that like button, subscribe if you haven't already, and drop me a comment below with anything that comes to mind. You know what time it is. Let's grow. Huge November moves. November makes our portfolio look a little bit crazy, and I promise you nothing's changed. There's no timing the market going on here. I'll spill the beans with one clean slide to show you what I'm talking about. They now refer to me as Jeff Big Moves Teeples. We sold all JEPQ to stockpile extra cash. This was late last month and early November. We did this because we were going to have to pay taxes on a $100,000 Roth conversion. You heard that right. We started to build that ladder, baby. And unfortunately, the time has come that we need to buy a new SUV for our family car. Well, a used SUV, of course, that is. Our 2011 SUV has seen its better days. We are way above our 10% cash allocation in the portfolio right now. And this is just because we need to have money to cover the taxes for all the big moves. I decided to start our Roth conversion ladder right here, right now in 2024 after running some numbers. My wife and I sit right at the tip top of the 12% tax bracket, maybe just cracking into the 22% bracket now that I left my high-paying job. And when I was tinkering with the numbers, I realized there won't be a year where we don't fall into at least the 22% tax bracket moving forward. We might as well get my traditional IRA converted over to a Roth at 22% before she retires. And then we can focus on her Roth conversions. Even then, we'll end up inevitably entering into what now is the 22% tax bracket, and it will likely be around 25% when that time comes. There are a lot of positive trickle-down effects of getting these conversions done as soon as possible. It will take a second video to cover that in more detail. And replacing our family SUV is annoying but inevitable. Safety comes first, especially that of my wife and my kids. I have a lot more to share because next month will feature some big moves as well. But that's enough for this one. Let's get into this thing already. Portfolio overview. Let's dive into the full details of all of our portfolios. We're gonna start out here in E-Trade as we always do. E-Trade's where I keep all of my previous 401ks from my former jobs and our taxable investments. So it has the lion's share of our overall portfolio. So on the portfolio tab, I just have it filtered to all accounts. And I love how clean E-Trade's interface is compared to things like Fidelity. But you can see all of my holdings here. Oh, and before I dive in, after the Roth conversion of around 100,000, I have in my traditional IRA $433,000 left to convert in the future. I had a little sticky note here with that written down. So I show all these together. It's taxable, Roth, and traditional, and this just plops them all in one. But 433,000 of this still needs to be converted. And you can see with SCHD, we have 14,200 shares at an average cost of $24.50. We're up 61 grand on that. I've moved SCHD around so much in the past, so this isn't a true cost average, but hey, we'll take it for $409,000. VGT, it's been moved around, but not quite as much. We have 500 shares at an average cost of $246. And you can see, wow, $644.54 a share. That's incredible. So we have a total gain of almost $200,000 on our VGT, and its value is $322,270. We have a lot of cash right now for reasons that I've already outlined. Got to buy that new car, got to pay those taxes on the Roth conversion. QQQM, all of these shares except for 4 are mine. 4 are my nephew's, whose account is merged in here. but I have 432 and it's going to be worth in the low 90s. We'll see that out in Seeking Alpha. It extrapolates everything out. And then my last holding is IBIT. These down here are my nephew. So IBIT right here, 1,050 shares, average cost of 36. And as everyone knows, unless you've been under a rock recently, Bitcoin crossed $100,000 for the first time. IBIT is directly correlated to Bitcoin, is up nearly 61%. And it is at $61,000. And now we're out on M1 Finance, my favorite investments that I do, the HODL Factory, ran by my good friend Hutch and myself. I have to say, it has been a rough go on the HODL Factory lately. It was a devastating month. We underperformed the market severely. But the good news is our individual stocks, which is 25 different companies, on all, so since inception of 4/20/2023, we still have a lead of 66.2% total returns compared to the market, Boooooo, 50.5. And I think if we go year to date, which is basically 1 year at this point, we are still ahead. We had a healthy lead of well over 10%, I think coming into the last month actually. And the HODL Factory took a nosedive. So now on the year, it's up 31.1% to the market, Booooo's nearly 29. Still have a little lead there. I make quarterly updates that go into painful details of the HODL Factory. One of those is coming very soon. So I don't go into the 25 companies in this high level portfolio update, but I do have a spreadsheet out there for free for everyone, link in the description below, to show my exact holdings of the HODL Factory and the specific performance along with some cool key metrics. So be sure to get out there and check it out if you're interested. But we're still ahead. I'll take the win, but I'm sad to see our lead diminish over the last month. Okay, it's not all doom and gloom. We're at an all-time high of 1.589 million out here in Seeking Alpha, where I aggregate our entire portfolio. We already went over E-Trade, so I won't belabor this one. You can see that we have all the same amount of shares and average costs here, except for that QQQM. I mentioned 4 of those shares were my nephew's, so here's my QQQM worth 93.6K, and you can see the gains and everything. And spoiler alert coming up, but this may not be here next month. But now getting into the stuff we haven't covered, we have the wife's 401k, which is all in an S&P 500 fund. So I use Boooooo here, and it's 440,000. This ultimately will need to be converted when she retires early. So we have 440,000 plus my 433,000 that still needs to be converted to a Roth ultimately. And for our HSA, we have VUG. That's the best holding available in our health equity HSA. And she's been doing it for a while, so we have some nice juicy gains there, and we're up to $36,800. Not too bad. A lot of you out there know about the triple tax advantage of HSAs. They're very powerful if used properly as an investment vehicle. And then the HODL Factory, we just went over that, and I'm not gonna go into the details of this video. 25 individual stocks that I say I aim to beat the market with, and I do, but really we like consistent dividend growers with this, something to retire on for capital appreciation and dividend growth. I'll go into more details in my 4th quarter update video, which is coming pretty soon. And then cash equivalents, historically this has been in VMFXX, which is all in E-Trade, and we saw that earlier. But we have a lot of cash right now and high yield savings and a couple other less liquid vehicles that are getting ready for some life events. So this is just cash equivalents that is ultimately added to VMFXX, and we will see that on the spreadsheet pretty soon. But yeah, knocked another all-time high out of the park, even though we're about to blow a lot of this money. Now we'll quickly run through my spreadsheet. And again, this is out there on the server for free. You can see what I'm doing on a weekly basis, or you can track your own portfolio by using the general template. But this is where I punch everything in, and again, we've seen all these. And since I'm recording this on a weekend, this number is actually the same for once. Oftentimes I'm off by a couple days. So this is perfectly what's out there right now. And I'm recording this on Sunday, December 8th, and I'm guessing you're seeing this on December 15th. So we've had a week in the market since this point. So now that I've punched all the data in, these pivot tables automatically update, and they're my allocation tables. So this right here is basically my purchasing guide. What I do is I have my positions and then it groups them by type. So for growth, S&P 500, which is my cornerstone, and value,
I like to keep them about a third each. You can see I have some work to do here on SCHD. I need to continue building that position. My growth and my VOO are proportionally a little higher right now. And this tells me with new dollars, since I like a third of each, I put it into value. And then cash, again, is a little high right now. Historically, I keep this around 10% and I average it in if it gets above 10%. That means my equities have gone down, so I need to deploy cash to buy the dip a little bit. And if cash gets below 10%, that means all of these have gone to the moon and I need to replenish cash with my new money. So I like to keep it around 10% to my target allocations. And then crypto, which is my IBIT, I like between 3 and 5%. We're right there. I'm happy. No buys, no sells. And stocks, which is the HODL Factory, I'm slowly ramping up with my YouTube money over time. So I usually show this graph real quickly, and we're in November. Technically, this update was in December, so I have one bar here, but the November bar with multiple weekly entries hit an all-time high over the month before. So we're still going up to the moon. My average portfolio value was 1.491 in October, and it went up to 1.542 million in November. And so far, again, the one update looks pretty good in December. This thing can't go up forever, you guys. We gotta stay balanced. And then quickly over to my favorite tab, and here's that thing what I mentioned earlier. Our 401k plus a huge match, plus HSA and a huge match, ultimately gets us almost $3,700 a month invested. And so I take that number and I assume 8% growth, not adjusted for inflation. I do that in a different step, as many people know. So this real return with inflation would be around 5%. I like to conservatively say 8 instead of 10, which is the historical averages. And I just have some highlights here. In 3 years, we should be at 2 million. And at 7 years, we hope to be to 3 million. And over 3 million is our full retirement date.
The cash isn't flowing like it once did, but we still did throw a few D's on it. Portfolio contribution. I feel like a broken record here, but it's important for me to mention that we are funding our retirement future even in months where we don't have extra leftover money to invest in our taxable accounts. We maxed my wife's 401k and HSA out in 2024. This adds about $3,700 per month to our investments, including the weirdly high company match, for the cost of about $2,000 out of our net. It's time to see the other contributions for the month of November.
As promised, I cleaned up our slicers here. Last month it put the 10 under the 1 and I cannot stand that. So I had to make these number formatted in the background, but we're good to go now. So we slice out 2024 and November to see our new transactions. I put a total of $1,150 into the HODL Factory. And you can see that 700 shares of SCHD were picked up at an average cost of a split adjusted $28.17. So we dumped about $20,000 of that big chunk of JEPQ into SCHD, and then the other major chunk went into the money market for now and other high yield savings accounts because we have those incoming bills. Pretty tame month. Really just bought SCHD and then my default M1 Finance buys.
We love all new money, but oh baby do we love it even that little bit more when it comes from a certain source. Dividends received. This month was tame on dividends, as we would expect without our hero, JEPQ. But now that we started that Roth conversion ladder, I may have more to say about JEPQ very soon. For now, let's chill out and see what November brought us for dividends.
Oh, my favorite spreadsheet of them all, the dividend tracker. So it looks like I currently have all of 23 and all of 24 selected, and you can see the month by month dividends here. Of course, we're going to focus on November because that's the recent update. I haven't put December in, of course, for this year. Hasn't happened yet. And out in November, if we hit this friendly little drop down, last November, we had some JEP-E and some JEPQ right there. And then we also had the M1 Finance mix, which this year was about double, which isn't bad. It's a pretty low month. This year we have some E-Trade savings. Just when I move money around, it's not much, but 25 bucks of interest. I just started using it. And you can see we have a lot more of the money market at $381.30 of dividends compared to that low 20 last year. And we had our JEPQ. This is our last payment for now of 2024. There will be zero in December, most likely, but early next year, we'll see a nice new slice of JEPQ. And for the entire year, I collapsed this here. Last year we had $614 in November. This year we had $1,055. And for the year as a whole, we're up to $29,008 of dividends compared to $21,640 of last year. But that's counting December. You slice out December, and you can see we're way ahead this year. And hopefully we have a nice juicy December once again.
Time to make sure this thing is still on. Portfolio performance. Let's check in with the portfolio to make sure that the bogleheads aren't laughing us out of the room. As always, we'll compare our core mix to the S&P 500 and to the world market, VT.
We're out on Portfolio Visualizer, and we're going to test from 2012 through 2024, including year to date, so 2024 so far. This gives us almost 13 years of data. And to roughly mimic my situation, I don't know if this is perfectly accurate. Started work with my wife in 2010, and we had invested a lot in our 401ks just in the S&P 500. But I'm just going to guess an initial amount of $80,000, a contribution of $2,000 per month, and dividends reinvested, yes, and display income, yes. And before we jump over, got to show you the portfolios. I almost forgot that part. So portfolio 1 is my mix, 2 is the S&P 500 competition, and 3 is the world market VT competition. And you can see that I'm back to the mix I've actually used the last decade. I had picked up QQQM this month, but some changes are coming there, so I mysteriously dropped it. And this is my real mix that I've used over the years. And that's VGT at a third, SCHD at a third, and the market at a third. And you can see that portfolio 2 is the market, 100% VOO, and portfolio 3 is VT, the world market. It's basically VTI plus VXUS at 100%. Let's go. You can see here we have almost 13 years of data, January 1st, 2012, and we can't go back because of SCHD, but this is fine because it works well with my timeline, through December 6th, 2024. Coming down to the performance summary, this is pretty crazy because I actually nailed this on the first try when I tried to roughly mimic my past. Got it to 1.580 million with my mix, and putting the contributions into VOO instead of my mix would have ended at 1,353,000, still pretty darn solid. And then all along, if we were a boglehead over, again, what I've actually done the most of the last decade, we would end at 941,000 in VT. And we've looked at this many times, but our best year is the best, our worst year is the best, and the maximum drawdowns are fairly similar. Our standard deviation is a touch higher, but basically just as safe as the other two. And we have the slightly higher risk-adjusted return ratios as well compared to the market, and way higher compared to the world market. And as we look at the growth, and we look at this each month a little bit, I think it's worth the 15 seconds because you can see the markets trend together. I like to emphasize that this is not necessarily more risky than the market. It's just picking our own growth and picking our own value in roughly similar proportions. And on these total returns, we lost that first year, as I pointed out multiple times. We lost the second year in a barn burner, but then the last 10 years, the VGT SCHD mix has outperformed the market, each one of them, except for, this year I think we're going to lose. I'm not tapping out quite yet, but our mix is up 26.6% to the market's 29.2. We're beating the world market as always, but I don't think we're coming back against VOO. But when we look at the annualized returns, it makes us a little less sad, seeing that we've had a nice outperformance of about 1.6%, which compounds nicely over the full 13 years against the market, and then nearly 6% over the world market. That's a blowout. And the last decade, we're 15.4 to 13.3, so even a little more, which makes sense because the mix lost those first couple years up there. World market lagging at 9.4. And then the last 5 years, 17.6 to 15.7. Wow, that's a great performance for both. Let's just call it what it is. 3 years, we're just ahead in a photo finish. And in the last year, we are trailing the market. And by the market, I mean VOO, the SP 500. All these, you can just look as we go along, are a lot lower with the world market. And that's one thing I want to point out real quick. The reversion to the mean is real, but I have a video about this with well over 50 years of data. The United States market has crushed the world market. So yes, at times it is good to have international because the US stocks will crash and it saves you a little during those times, kind of like bonds actually, similar logic. But when you zoom way out and multiple reversions to the mean happen, I'd rather have the one that goes out the most with that long-term, never panic sell, dollar cost average in strategy. Portfolio income, which is being reinvested in this scenario, of course, it really shines with the SCHD VGT mix. And then of course you have a third of the market as well. The green bar is in this blue bar. The my mix is the blue bar, as we can see, but we're really seeing that dividend growth of both outshine the markets. So far in 2024, it's 19,000 versus almost 12,000 with VOO and 10.6K with the world market. This is the holdings-based style analysis for my mix. And what I look at here is the PE ratio is 27.6. So that's a little bit high. When we go down to the market here, the PE ratio is 26.9, so a little under 1 less. They're pretty close. And you can see here it's 81.7 large cap to a similar but lower 75% large cap of my mix. So my mix pulls in, mostly because of VGT and SCHD as well, some more small and mid cap companies. I like a little variety there. And then VT is ironically very close to my mix from a cap perspective, but from a PE ratio for value, it's at about 21. So you can swoop these up at a better value, but better is a strong word because as we talked about, there's a reason when you revert to a mean, the mean itself is the average. Sometimes you're higher, sometimes you're lower, but the mean is lower. And then the last thing I like to show, we're just gonna hone in here on November, month 11. You can see that my mix fell just short of the market at 5.81% return, so great month, to 5.89. And the world market came in last at 4.14%. And to break it down, of course, I have a little slice of the market itself at 5.89. It looks like SCHD in this month underperformed at 4.61 and VGT overperformed at 6.86. And that's what ultimately got us roughly tied with the market in November.
It was a fantastic month for the market, and that pesky S&P 500 is still running away from us for the year. I don't know if we're gonna catch it, but you know what? That's why I invest in it. Looking ahead, I'm excited to share more about our future portfolio in next month's update. JEPQ will be making a heroic return, but this time it will be where it belongs, in a Roth IRA. More to come. Thanks for tuning in to another portfolio update. And check out one of these two videos if you want to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you here in the next one. Peace.